Welcome to another insightful session with Informed Investor. Today we are talking about the biggest name in the Indian paint industry, Asian Paints. Once an investor's favorite, the stock was a shining star in the market. But lately it seems to be losing its charm. If you see its performance over the last 6 months, it has declined by more than 33%. And even if you look at a longer time frame, say 5 years, it has delivered a mere 25% only. So what's happening to this once invincible giant? Is this just a rough patch or a sign of a bigger problem? Let's break it down. You're watching Informed Investor, an initiative by Equentis. First things first, let's do a quick overview. Asian Paints is a household name in India, synonymous with vibrant colors and premium quality paints. But beyond the familiar paint cans, the company has evolved into a diversified powerhouse, establishing itself as a dominant player in both Indian and international markets. Founded in 1942 as a small trading company dealing in paints and allied products, Asian Paints has come a long way. Decades of strategic expansion, innovation, and market adaptation have propelled it to a global recognition. Today, it ranks amongst the top 8 coating companies worldwide. Apart from paints, textures, and painting aids, Asian Paints offers a comprehensive range of products including waterproofing, mechanized tools, adhesives, modular kitchens and wardrobes, bath fittings and sanitary wares, and many more. Asian Paints operates across multiple segments, ensuring a comprehensive approach to home and industrial solutions. First, decorative paint is the company's largest and the most recognizable segment, featuring interior and exterior wall paints, wood finishes, and metal coatings. Asian Paints is setting new industry standards by constantly innovating and introducing products such as high-performance finishes, eco-friendly solutions, and anti-rust coating. Recognizing evolving consumer needs, Asian Paints has expanded into home decor solutions, offering wallpapers, wooden flooring, and even light fitting. This strategic diversification positions the company as a one-stop solution for home improvement rather than just a paint brand. Decorative and home decor business takes up the larger chunk of the pie, contributing to about 88.2%. Asian Paints also caters to the automotive and industrial sectors with custom formulated high quality coatings. Although this segment only contributes to about 3.2%, it plays a vital role in diversification and strengthening its market presence in industrial applications. Beyond India, Asian Paints has successfully extended its presence across Asia, Africa, and Middle East, further cementing its reputation as a global leader in the coating industry, and this segment contributes to 8.7% of the revenue. Asian Paints' well-established supply chain and extensive distribution network have enabled it to outperform competitors and sustain its market leadership for an extended period. As a result, the company's revenue surpasses the combined earnings of the other 3 major paint manufacturers in India. As of FY24, the company boasts India's largest decorative paint production capacity, reaching 18,50,000 kiloliter per year, a significant rise from just 6 lakh kiloliter in FY2010 to FY2011. But how did Asian Paints reach this stage and become so dominant? One of the most fascinating stories about Asian Paint is its early adoption of technology. Back in 1970s, they bought India's first supercomputer, a CDC 6600, for 8 crore rupees. And believe it or not, Asian Paints owned a supercomputer before ISRO, a feat unimaginable. So anyway, this supercomputer helped them analyze consumer buying habits across country and predict color trends in different regions and optimize their distribution network. This helped them to forecast better and deliver products directly to retailers 3 to 4 times a day, ensuring stock levels always met consumer demand quickly. This strategic use of technology gave them a significant edge over competitors and helped them build incredible brand loyalty. Next, Asian Paints' distribution strategy has been another key factor in its success. They developed a robust network of dealers and retailers, ensuring paint availability in both rural and urban markets. By bypassing wholesalers and distributors, Asian Paints could offer better margins to retailers. This direct-to-retailer model allowed them to retain more than 90% of the maximum retail price, compared to competitors who typically retained only 60 to 70%. Today, Asian Paints boasts over 1,60,000 retail touchpoints across India. significantly more than its closest competitor Berger Paints, which has about 60,000. This extensive network enables them to deliver hundreds of shades of paints to customers as needed, leveraging their strong supply chain and logistics system. Another initiative that helped the company thrive is the paint business in the pioneering concept of tinting machines. Now, what's a tinting machine? A tinting machine is a device that allows a dealer to mix a precise amount of color with a base color to create a variety of paint colors. These machines, equipped with precise colorants and pigments, allowed instant customization for the customer, delivering the exact shade in minutes, whereas earlier it took weeks. This eliminates the need for dealers to build up inventory. Currently, Asian Paint leads the market with over 50,000 tinting machines, surpassing Berger and Nerolac's combined 46,000. Now, Asian Paints tackled a major industry issue, which is blocked capital due to 180-day credit period for distributors. So basically, when paint companies give their products to distributors on credit, the money is paid back to the manufacturer in 180-day period. While this was good from the distributor's point of view, for the companies, crores of money for the goods was blocked for 180 days. Asian Paints management observed this problem and started offering discounts for upfront payments, incentivizing distributors to pay immediately. This improved their cash flow and reduced reliance on credit. Moreover, these moves shortened their cash conversion cycle, freeing up working capital for growth and innovation. By addressing inefficiencies and creating win-win outcomes, Asian Paints strengthened its financial health and solidified its market leadership. Apart from this, there are few more recent strategies adopted by Asian Paints. In the 2000s, Asian Paints expanded beyond paints into home decor solutions, offering modular kitchens, bath fittings, and wallpapers. This diversification helped them become one-stop shop for home design needs. Asian Paints has focused on sustainability by introducing eco-friendly, low VOC paints, aligning with global environmental standards and consumer preferences for green products. Lastly, the company has embraced digital tools like the color visualizer, allowing customers to virtually experiment with color schemes. This interactive experience has enhanced customer engagement and solidified its market position. Now, despite all these big moves in the past and having maintained a competitive moat over its competitors, what has happened to Asian Paints lately? Firstly, and the more broader factor is the valuation correction. If we look at historical data, Asian Paint's stock price had surged to levels where its PE ratio exceeded 100 at one point, and 119 to be precise, while the median PE stood at 76.3. This is unusually high compared to its peers and the broader market. This valuation was largely driven by investor optimism and the company's historical performance. Moreover, if you see over 10-year period, the stock price grew at a CAGR of 19% while the earnings grew at 16% over the same period. So when earnings growth didn't keep pace with the stock price rally, it created a disconnect between the company's financials and its market valuation. As a result, the stock has seen a valuation correction, with its PE ratio now around 50 levels, which is still higher than many of its competitors, but more reflective of its current growth prospects. The paint industry has been experiencing a slowdown, particularly in urban areas. Factors such as rising house rents, elevated food inflation, and low wage growth have led to reduced consumer spending on non-essential items like paints. And on the same lines, Asian Paints, which has seen a significant presence in the metro cities, has borne the brunt of slowdown. The company reported a 3% decline in sales for Q3 FY25 alongside a tepid 1% growth in volumes. Additionally, Asian Paints CEO Amit Single mentioned that this has been the toughest demand environment for the company in the last 3 decades and expects urban demand stress to last for at least 2 more quarters. Asian Paints has faced significant financial challenges in recent years, marked by declining revenue and profitability. With subdued demand and an industry slowdown, Asian Paints has witnessed declining numbers. For example, in Q1 FY25, revenue fell by 2.3% year-on-year to 8,970 crore rupees, and in Q3 FY25, it dropped further by 6% to 8,549 crore rupees. Margins have been under significant pressure due to rising raw material costs and increased competition. After being over the 20% levels in calendar year 2023, the operating margin declined to under 20 levels, even reaching 15% in Q2 of FY25. These margin contractions are partly due to an unfavorable product mix and companies' inability to fully pass on raw material cost increases to consumers. Profitability has also been mixed for Asian Paints. All these factors along with price cuts have hurt the profitability levels. If you look most recently, the third quarter, which usually is strong quarter for paint industry due to the festive demand, also witnessed a decline by a massive 23% to 1,128 crore from 1,475 crore rupees in the same period last year. Now, another factor is the entry of new players which has intensified competition in the paint market. Take for instance the entry of JSW Paints in May 2019, launching with the slogan "Any color, one price," ensuring consumers gain great value, making them free to choose any color for the same price. Even Pidilite Industries, primarily known for its adhesives Fevicol and Dr. Fixit, also ventured into the decorative paints market in 2023 with the debut of Heza Paints. And that's not it. Recently, the Aditya Birla Group also entered the paints business with Birla Opus Paints with an upfront investment of 10,000 crore rupees. It has started strong and already enrolled 3 lakh painting contractors and is starting the largest ever sampling program. And guess what? Impressively, within a year of launch, Birla Opus, through its strong distribution and advertising strategies, expects 6 to 8% market share in the Indian paints market. It has also become the India's second largest paint maker in the country. This increased competition has made it challenging for Asian Paints to maintain its market dominance without compromising on profitability. Next, economic uncertainty and weakened consumer sentiment have contributed to the decline. The Indian paints industry is more than just about adding color to walls. It serves as an indicator for overall economic health. When people invest in home improvements like painting, it often signals financial confidence. Conversely, when they postpone such expenses, it reflects caution about the future. During periods of economic instability, consumers tend to cut back on discretionary spendings, including paint. This cautious spending behavior has led to lower demand for decorative paints, which form the core of Asian Paints business. Despite the challenges Asian Paints has faced recently, let's look at what lies ahead for this paint giant. Firstly, let's look at the management commentary. Asian Paints is navigating a tricky demand environment. With the urban markets facing some stress, the management has mentioned that they remain cautiously optimistic about recovery in the coming quarters. Additionally, the management is focusing and banking on rural resilience, brand strength, and industrial growth. But apart from this, for the longer term prospects, there are some other positive triggers positioned for the future. First, the recent budget announcements and the foregoing 1 lakh crore in the direct tax revenues are expected to increase disposable income, which could stimulate consumer spending and benefit the paint industry. Asian Paints' strategic moves like setting up a VAE and a VAM plant and a cement plant through a joint venture in UAE are seen as steps in the right direction. These initiatives will help them backward integrate key raw materials, reducing their reliance on external suppliers and manage input costs more effectively. Asian Paints has started expanding its manufacturing footprint by 30 to 40%, which will enable it to meet future demand more efficiently and strengthen its supply chain. The company is focusing on launching differentiated next-generation emulsions and waterproofing products based on nanotechnology. Now, these innovative products will cater to evolving consumer preferences and help maintain its competitive edge. With an increasing emphasis on eco-friendly products, Asian Paints is aligning itself with global environmental standards. This focus on sustainability will not only appeal to environmentally conscious consumers, but also future-proof the business against regulatory changes. Now, to conclude, Asian Paints' story is a reminder that even the most successful companies face challenges. It's a dynamic market and things can change quickly. As investors, we need to stay informed and adapt to changing conditions and maintain a long-term perspective. While the current situation may seem concerning, Asian Paints has a strong track record and resources to navigate these challenges. The company's ability to innovate and adapt will be crucial in the coming quarters. Thank you for joining me in this insightful session with Informed Investor. Having said this is Neha signing off.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.